Nadia Lovell, heading into the end of the year, you want to own disruptive technology companies. All right, how disruptive do you want to get?
We want to focus on those companies, a really leader within the sector. So we are focused on e-commerce leaders and cloud computing because we think that there are strong tailwinds that will help these companies outperform in the longer term.
And you are also a fan of shale-focused energy producers. Is this some kind of a play on a colder winter coming up? Is that what you're saying?
No, this is more on a play on a rebound in energy prices. We've seen oil prices sort of stabilize in this $40 to $50 price range. And so we are focused on those more profitable basins like the Permian Basins that can operate in a low oil environment.
All right. Also, heading into year end, you are a fan of consumer discretionary stocks. So we're heading into the shopping season, the holiday season. Do you expect it to be merry for the retailers? Is that the play?
The play is more easy comms into year. And if you might recall last year, the inventory got to really high levels and that put downward pressure on a lot of our retailers. They really cleaned up inventory. Inventories are clean coming into the fall. And we think that those companies are best positioned for a rebound. But specifically, we're focused on those companies that have a strong footing in e-commerce and differentiated products.
All right, what about the healthcare sector? Clearly, we're in a political season, and we saw what happened to EpiPen and what happened to Valiant and Martin Shkreli. So what's your view of healthcare right now?
We think healthcare is very attractive. The sector has been beaten down due to the political rhetoric and the noise around drug pricing. But if you look at the sector right now, it's really trading at a discount, about a 10% discount to the broader market versus a historical 13% premium, despite the fact that you see better earnings growth within the healthcare sector. Next year, consensus is looking for about 10% earnings growth versus the broader market ex energy at 5%. So we think that over the longer term, healthcare is very well positioned given the innovation that we're seeing in this space, particularly in oncology. And so this is a part of the space that you want to be in. You want to be within those companies, high quality companies with strong product pipelines.
And do I want to be in financials? Because a lot of people say the stock market's not going to move higher unless you have financials lead, and financials have been lagging all year.
So we're neutral on financial, and we've been advising clients to really sell any sort of strength that you see into financials. There continues to be this debate about whether the Fed will move in December or not. Our core view is that they will move, and we would use any sort of strength into year-end to sell financials.
All right. Thanks a lot for coming in and giving us your year-end playbook, Nadia Lovell.
Thank you so much.
And thank you for watching The Street.